Good
While I am
afternoon. I am
getting my
Shay. For
screen in
those who have
place.
not been in the sessions and have met me, I am an accountant by trade. I have been in accounting and finance for over 25 years. I'm currently a director of finance and operations for a school district. Um, and I just love the business. I love numbers, and I specifically love to share my knowledge with others on all things accounting and finance. So today we will be talking about budgeting and financial planning. And I'll just start by talking about what a budget is and what the importance, why budgets are important. And a budget is really just a financial plan that outlines how much money your business expects to earn and how much money it plans to spend over a period of time. Say a month, a year, or 5 years, however long you would like to set a budget for. And why budgets are important is because they provide control to help you control your income and expenses. It prevents overspending if you have a roadmap, a budget to follow. It can improve your cash flow over time. It also helps you to build confidence with lenders when you're trying to borrow funds. If you have a healthy budget, that is helpful. And it helps you to prepare for the unexpected. If you kind of have a roadmap again of where you're going, what you're expecting, a budget can help you do all of those things. Um, so the basics of a business budget and the key components that you would have in your budget are your revenues, which is any monies you make from sales or services, whatever you are providing in your business, and any other income that goes against your bottom line. Your fixed costs, which we talked about fixed cost in my last presentation, and fixed costs would be like rent, payroll, or insurances, things that you can plan for every month. The cost usually doesn't change month over month, so you know what to expect in your budget. And then you have your variable costs, which are such costs as supplies, because they fluctuate from time to time, whether it be seasonal or overages or underages of inventory, utilities and marketing, advertising, supplies, advertising, things like that. Those costs can vary from month to month. And then you have the cash flow that you have to incorporate into your budget. And that is the timing of the money that comes in and the money that goes out. And all of this, with your revenues and your expenses and your cash flow, will bring you to the bottom line, which is your profit. If you've made money, if you have more income than expenses, or a loss if your expenses exceed your income in your budget. So the steps to creating a business budget, you would first estimate your revenue. And again, that is all the monies you expect to collect, whether it's from sales, services, or any other income that you may have coming in. You would list all of your expenses. And one thing when creating a budget, it's good if you can go off of your history. So you kind of look at what has happened in the past, how you've spent in the past, also whether it's seasonal expenses or it's monthly, like fixed expenses. And you have to remember, and I think we talk about taxes on every seminar that we've had, every session we've talked about taxes. So you also have to set aside funds for taxes, any debts, and you want to have a healthy savings. So you have to figure out how much you can save on a monthly basis and set aside monies for savings. And all of this should be incorporated when you are planning and creating your budget. And then you should plan for profit reinvestment, meaning any profits that you make, a certain portion of those you should plan to reinvest in the business. And you can reinvest in many ways, such as putting money in for emergency funds. You can put money into your advertising or your marketing to increase the presence of your business. And there are many ways that you can plan for profit reinvestment when you are creating a budget. Another thing that I like to talk about when creating a budget, because I've seen many people create budgets and they just take, say, if you plan to make $20,000 for the year, and they just divide it by 12 for an annual budget and put the same amount in every month. But if possible, you should be more realistic with your budget and plan in a seasonal manner. So if you don't make much money in the summertime, then you should not spread your budget over 12 months because that's not reasonable. So there may be certain months that you make the most of your money. And that may say if that's in the first quarter of the year, January, February, March, then however you are receiving your funds, and if you know that those are the months that you make the most money, then that's where your income should go. You should not spread it out over 12 months because that is not a good budgeting practice. And as well as your expenses, so that you can really match your revenues and your expenses on a monthly basis. And on a yearly basis, they should be in the months incurred. So it's easy to just say, okay, I plan to have $50,000 in expenses, so I'm going to spread that over 12 months. But if that's not how your expenses fall, then you should really try to budget realistically in the month that things are happening. And that gives you a better picture of things, that helps you to know where shortfalls may lie or where overages may lie. May I ask if anybody on the call that has a small business, do you have a budget now? If anyone wants to come off mute.
No, I don't have a budget.
Okay.
Denise had a question, Shelita.
Okay.
No, I was just asking
She
to
wants,
for her to repeat what she just said about budgeting within that month and not spreading it out over the 12 months.
Yeah. So I was saying, say you have a business and you plan to make $12,000 for the year. It's easy to set up a budget. You usually set it up from January through December. It's easy to say, okay, I'm making $12,000, so I'm going to put $1,000 from January to December in my income. However, you may say October, November, December are slow months for you, and you're only making $100 in those months. When you're budgeting, you need to be more realistic and not just spread it out over 12 months. To make it easy, you need to budget just like with your business, Trinice, if you know, like summers, you may have lots of festivals and you may make 80% of your money in the summertime. Then you need to budget, from May, June, July, and August is where most of your revenue should be budgeted in your annual budget.
Gotcha.
Does that make sense?
Yes, perfect.
Okay.
Okay.
Okay, but lots of people will do just an annualized budget is what I'm saying. And they would just take the $12,000 and say $1,000 from January to December.
And that's what I was doing.
See, but that doesn't really give you a clear, honest picture, of how your money is being made.
Exactly.
Because in November and December, okay, you may hit a few festivals, but they will be nothing like, May through, say, September.
Absolutely.
So, and as your expenses as well should go the same way. Because usually if you're hitting more festivals, then you need more supplies and you need more mason jars and you need more this and that. So that's where your expenses should lie too. So when you're looking month over month over what did I make, what did I budget versus what did I spend, it should just read clearer than if you're spreading it out, you won't have a true picture of what's happening. Make sense?
Perfect sense. Yes.
Okay. Any more questions on that piece?
We should take the lid.
Okay. So next we will talk about well, before we go to the financial planning, I have pulled a budget just for you all to view. And what I will say, we talked about softwares, different software such as QuickBooks and Wave that will have budgets. But if you
Shelita, this
uh-huh,
this thing, can I jump in?
uh-huh.
Going back to what you was talking about, creating the budget. What we should also be doing is collecting the actuals, so you can actually do what we budgeted and what we have as actual. And
Right.
then once you do it that one year, that next year it'll be a little bit easier because you'll have the actuals that you can see. Like she was saying, how your stuff goes for seasonal stuff. You'll be able to see that, and it'll be able to help you to create a better budget for the following year.
And that's what I was going to talk about with historical data, because when you're setting up a budget, it's good to have historical data to use to set up your budget. So the first year, you really are budgeting from a zero-based budget, which means you're just kind of figuring out what you plan to spend, what you plan to bring in. But after the first year, then you have historical data to look back to say, okay, last year, I made this amount, I made the amounts in these months, and that gives you a jump start to set your budget for the next year. So I am going to share. I want to share with you a budget that I pulled, and as I was saying, you can use a software, but you can have an Excel spreadsheet that's set up. And if anybody is interested in having this one, I will share it at the end. I can email it to you, but it's very simple. You don't have to spend a lot of money to set up, to start your budgeting process. This is a simple Excel spreadsheet. And the way it's set up, if I just put my information here, I just said Shelita's company, and this is how it starts. And you see it brings up my name on each page because the spreadsheet is already set up. If I put the date in, it will, you can put your logo. If I put the date, and I'll just put September 1st, 2025. Oops. No, it's probably set up. Let me see. And then it will go to oh no, it didn't come over. Okay. So you see that it has the budget totals, it has income, expenses, and then a balance. And then it has actual expenses down here. But if you go into each of these tabs, there's an income tab. So if I put the income here, $12,000, oops. It's gonna, what is happening? Oh, I'm sorry. So it has net sales of 12,000, interest income of 3,000, asset gains of 3,000. So it has total income of 15,300. And then so you have your estimated and your actual, and then it'll show you the difference. So you can quickly look at this and say, well, I estimated that I would make $12,000. I actually made $54,000. So my difference is $42,000. So it shows you this, but if I go to my monthly budget, it pulls it over. My income was 15,000 to actual, and it gives you the difference. So it's as simple as setting something. It can be as difficult as you like or as intense, or it can just be very simple. And you can just set your expenses up here, and you see you have your budgeted versus actual, which was what Ann was talking about. And then it gives you the difference. So you can see, oh, well, I budgeted 3,000, I made 2,500, so not too bad. My difference is 5,000. I'm sorry, 500. So budgets can be, they don't have to be very difficult in the beginning, but it just gives you a picture and helps you to keep up with what you're doing. What I suggest, and when I do budgets after you have the first year, I always put the prior year's numbers in the budget so you have a comparison on a monthly basis. So where I would have actual here, I would have a date to say actual for August 31st, 2025, and then I would have actual for August 31st, 2024, because then that way you can see the fluctuations of the timing of things, just to compare if you're doing better or worse than the prior year. So I would say that that is a good tool to use to always compare to the prior year at the same time the prior year. So if you're in August, you need to compare August to August, not August to December or August, to another month, but you need to compare on a month-to-month basis. Any questions?
Yeah, I had a question real quick.
Okay.
So, okay, you got the estimated and the actual. So, based off the differences, because like say you're comparing years, so based off the difference, is that where me adjusting my estimated comes in? So like next year, would I decrease that estimated 3,000 to 2,500 because that's what I made, or is it just supposed to be just in a ballpark?
It should be, you wouldn't decrease it because that's what you made, but when you're looking at, well, I estimated my budget was 3,000 and my actual was 2,500, you need to question the why, what happened, because next year, whatever the reason was, you may be able to fix it where you do hit 3,000. Now, if you don't think you'll hit 3,000, because you won't be budgeting again until the following year. But you need to have justification of, what happened for each one. And then the next year that will help you to know, should you use 3,000 or should you use 2,500?
Okay, that makes
Because
sense.
there could very well be a reason, depending on what your business, it could be weather related. So just say for Trinice, she does a lot of festivals. So say you budgeted for 10 festivals in July, but 3 of them were rained out. So the next year you wouldn't really go down on it because you didn't make that money, because that was a weather related issue. So it just depends on the reason that you did not hit budget.
I got a good example, Shelita.
Okay.
During tax time, everybody buying a car. So if we have anybody on here that's
Mhm.
car salesman, doing that February through April timeframes, the car sales are going to be high.
Mhm.
But after that, it just drops off.
And so that's a very good example. So when a car dealership is planning their budget, February, March, and April, their sales will probably be way higher, their revenues on their budgeted side, than in October and November. Okay, so I'm gonna stop sharing this budget. Okay. So next we'll talk about the financial planning for growth, which goes hand in hand with the budget. Because then there's cash flow management and timing of income and expenses, which we were just talking about. And when you're preparing your budget, you have to, again, be realistic on the timing, and you have to sit and go over your company's income and expenses month to month, so that you'll know timing of, when you may need more of a cushion to cover expenses that you won't make as much revenue, because your fixed expenses, whether you're making money or not in certain months, those fixed expenses will still be there. Oftentimes when your revenue is low, depending on your business, your expenses may be low in certain areas, but your fixed expenses such as your rent, your insurances, those things you still have to cover every month. So when you're budgeting, you need to know the timing of your revenue so that you can have a cushion, you know, for times that you aren't getting as much money coming in, which is your emergency and reserve funds, which I was just talking about. So you have to prepare for slower months. And when you have a realistic budget, then you have that kind of built in so that you don't find yourself in a bind and you don't find yourself having harmful debt versus smart borrowing, and that's debt management. And when I say smart borrowing, I mean borrowing where you have reasonable interest rates and repayment terms. And sometimes you get in a bind and people borrow, they're in a desperate situation, so they aren't always having making smart decisions when they are borrowing. So with smart borrowing would include reasonable interest rates and repayment terms, having a clear purpose tied to your borrowing. So it should be tied to the growth when you are borrowing. Your borrowing should improve your cash flow. And an example of that is you may take a loan to purchase equipment, but the equipment will help you serve more clients. So that will also improve your revenues and your cash flows. Or you may take a line of credit to cover short-term seasonal cash flow gaps. So that is smart borrowing because you're borrowing with a purpose versus having harmful debt, which harmful debt could include high interest rate debts, no clear plan to cover the repayment. You don't have a clear plan for revenue to bring in to cover your repayments. That is not smart borrowing. And if you're borrowing using the money that you're borrowing to fund ongoing losses in your business, that is not smart borrowing either. And that can hurt you. And also when you take out loans for non-essential items, so say you have a office space and you want to upgrade your office furniture, or you want it to be more luxurious. That's not smart borrowing. That's really harmful debt because it's really not necessary. And a lot of times there are no clear-cut path to repaying that kind of debt. And when you plan for financial growth, you have growth planning. So you can also budget for expansion and hiring more people. So that can be included in your budget if you're planning for growth as you go. So tools, tips, and common mistakes when setting a budget and financial planning. One tool that you can always use, like I said, is software. We talked about QuickBooks in our last session. We also talked about Wave. As I just showed you, that was a simple Excel sheet. I won't say it was simple, but it was an Excel sheet, and I did not build the sheet. When you go into Excel, if any of you are familiar with Excel, if you click new, it will allow you options on what kind of Excel sheet you want. And if you just put budget in, it will give you several options for a budget. And you can probably find one that meets your needs. And then you can build from there. The formulas are already included, which is very helpful because many people know Excel, know the basics of Excel, but you may not know how to set up formulas and things, and you don't have to know how. It will set it up for you, and you can just enter your information in. And also with the Google Sheet. Common pitfalls of a budget is underestimating expenses. And when you're doing a budget, if you have historical data, it is very important to use that historical data. But to have good data, and I know I talked about this before, you have to keep good records. And if you have any kind of software that you're using, you have to put in good information because garbage in is garbage out. If you put bad information in, it's going to spit you out something, but it won't be useful in your planning because the numbers aren't real. Whether they're overstated or understated, it won't be helpful. So underestimating expenses And overestimating. It just says underestimating, but overestimating expenses, both of those can be harmful when creating your budgets. Not saving for taxes. Taxes is it's just a thorn in everybody's side, except ours, because we are here to help. But if you don't save for taxes, it's an unexpected expense, and oftentimes it can be a very large expense. I know Ann talked in her, Ann and Nate have talked about taxes, but I remember Ann talking about estimating taxes. If you're not sure of how much taxes you need to save for, or you will be hit with, you can always estimate on a monthly basis, and putting money aside for those taxes will help you in the end. And making that a line item in your budget would be very helpful also. And just poor record keeping, which also includes commingling of funds, which I'm probably sound like a broken record because we talked about that. And when I say commingling, I mean commingling your business with your personal. That is poor record keeping, and it will be a pitfall in setting up a budget, because a lot of times when you start to commingle funds, you can't really tell what's what and what's really a business expense versus a personal expense. And those need to be very separate when you are creating a budget. And then knowing when to seek professional help. And oftentimes, I think we said that also, even if you can't afford to have a tax person or an accountant on standby or on a monthly payroll, once you set up a budget, or even just having them, for one time or every 6 months check-in, or maybe quarterly, where you're just paying the times that you see them, for them to look at the budget that you have set up, to go through it with you line by line, and they can ask questions that you may not have thought about. They can tell you if you're estimating enough taxes that will be paid for your business, or what you need to do to get to that place. That is a very important piece that can help you to be successful in your business also. Key takeaways from this is just make sure that you understand the role of budgeting and the importance of budgeting in it. No matter what kind of business you have, no matter how big or small, you should always have a budget, because it's just really just a roadmap to tell you, I plan to bring in this much and I plan to spend this much. And a financial planning for your cash flow purposes. To create a simple budget tailored to your business. Again, you can get a simple budget. You can just start with Excel. That would be my suggestion, is just to start with a Excel spreadsheet. And then as you grow, you can grow from there, because you can customize it. You can add what it will give you, the basic expenses, the rents, the utilities, the supplies, maybe the postage, things like that. It will give you those basics, but you can also customize it, and add expenses that are specific to your business. If it's transportation or delivery fees, or whatever it is that you have, you can customize a Excel spreadsheet. And it may be a lot of work on the front end, but once you get it set up, then every month you're just going in, adding your numbers. And also in a budget, if you have one as that, you don't have to wait till the end of the month to add your expenses. You can add them as you go, or maybe weekly. You may set some time weekly to say, these are all of my receipts. I'm going to categorize them, and I'm going to put them in the right categories in my spreadsheet or in my QuickBooks file, or however you want to keep it. And that can give you your budget to actuals in real time. And that can help you to plan for the next month or the next year, or however you want to plan it out. Identify financial pitfalls and then figure out how to avoid them. Again, that's if you have to borrow and if you have to have debt, you have to be smart about your debt. you may have to shop around for loans before just going and just grabbing one, which helps if you're not in crisis mode when trying to get a loan, because a lot of times when you're in crisis mode, you'll just take whatever is given to you. And that does not help in the success for your business. And then using basic tools to forecast. And the main thing I would say, like I said, is historical data. If you have historical data from what happened in the prior year, that helps tremendously when you're forecasting for your budget and when you're ready to set up a budget and for your cash flow situation. Any questions, comments?
Okay, I have one.
Okay.
So back to whenever you was talking about reasonable borrowing versus not smart borrowing, what's the difference between getting credit for seasonal gaps and getting like a loan or whatever to cover losses?
Well, you can get a loan to cover losses, but when you're getting a loan to cover losses, you need to have a plan of how you will repay the loan and how the loan will help you in the long term to get more revenue. Because some people will get a loan to cover the loss and then they'll have more losses, so they'll get another loan to cover that loss. And then it's constantly borrowing and you're just constantly going into debt.
Okay. I have plan to recover or a revenue stream to get that back together. And then also, so when you like really like first starting out, how do you even go about a budget to do that when you don't know, how much you might need for marketing? Because like I have an online business, so I'd assume like my marketing is what's really going to come in, especially like social media marketing, whatever. So how would I even know what to ask? First of all, what to ask for in a loan, and second of all, how do I even know how to categorize the money within it?
When you say categorize the money within your budget,
Yeah, like what buckets do I put it in? Like how much do I need for marketing, or what should my emergency fund be? Like, do I just keep it in a general number, or is there ways that I can, I don't know, tailor it toward me so the way I don't know. I don't know what I'm asking. I don't know.
So Deja, so what'll happen is normally when you're going for a loan, they'll have a form that's called use of funds, and then sometimes it'll have categories, or you'll put the category. I'm going to use this for my 3 months rent. I'm going to use this for my marketing. I'm going to use this for insurance. So it's a form out there called use of funds that they normally anybody that's doing loans will give you in order to spell out what you need the money for.
Okay.
but are you also asking even before that just to set up your own budget? How would you do that? Or do you?
Yeah, like okay, so you had mentioned, because I just got a shop, right? Not furnished, not nothing. And at first, prior to this, I'm thinking, okay, boom, that could be part of my, I guess, my use of funds, like to have some money set aside for that to kind of furnish the shop to where it's just not like a chair inside of a shop, whatever. So, but to you, or what you were explaining, like that's part of like a non-essential items, or that's not necessarily for growth. So I guess my question is, how would I know when I'm just starting out what's what?
So I would say for your budget, if you're just starting out and you are setting up a budget, though you're just starting out, you've been doing hair, you've been doing hair and selling your bonnets. So you would start with your revenue, so you know about how much money you bring in on a monthly basis. So that could be your starting point. So right now I bring in $2,000 a month on a monthly basis. So now I need to break this $2,000 down into the expenses that can be covered in this $2,000 a month. Well, the supplies that you need, to do the hair. So you can start with the supplies. you have a booth rent, which is a fixed cost. Or if you don't have I don't know if you rent a booth or you rent a place, but you have rent.
Mm-hmm.
So that has to go, like certain things are non-negotiables. Rent,
Okay.
if you have to pay utilities. Then there comes a point where marketing is important, but even when you're considering your budget, your marketing on your Instagram page, that's free.
Right.
Your marketing on Facebook can be free. And you may want to say, well, the Facebook's ads to get 15 ads a month is $150 at different times. Is that something that you want to put in your marketing? So that's how you would start out your non-essential, not your non-essentials, your non-negotiables, things that you have to pay.
Okay.
And then you can add in the nice to haves, not the need to haves.
Okay.
And when you say, so if you just got a shop, and when I said bad, not harmful debt, if you just got a shop, you have to furnish it. So that's not harmful, but do you have to furnish it with the high-end chairs and you want them to be able to lounge and recline? Like, you don't have to do that, but you do have to furnish your shop in order
Right.
to make your business successful. So those are necessities. But so again, even in starting a budget, you can still use your historical data, because though you just got a shop and you just started, you didn't just start doing what you're doing. You know what I'm
Right.
saying? And you kind of know what your expenses look like.
Yeah.
So you can just list those out, even without any organization. You just get you some paper, you list your expenses that you have on a monthly basis. You list your money that you have coming in on a monthly basis. And then you go from there.
They just starting off is not gonna be an exact science. So
Right.
it's gonna be some tweaking and all of that. So you just gotta do it. And then if you don't know, you ask questions, and the
Mhm.
ones that know will help you.
Okay.
Don't stress over it. Cause we need you doing hair to make money.
Right. Yeah, I think that was kind of my thing, because right now I'm using my jobs to kind of like fund it. So I guess trying to like split that money and do the personal budget versus like creating a business one. I think that's trying to kind of where like I'm getting confused at. But I think I'm getting it now. I think I got it. Thank you for answering my question.
Absolutely.
Rachel has a question.
Yeah, thank you for, this is maybe a ridiculous question, but,
No.
well, it kind of is. But if you are a business that is always losing money and never profitable, how does the budget remain as important? I mean, I know that sounds terrible, but that's my question.
And can you expound a little more?
I guess just,
I mean, you say you're always losing money and you're never making money.
well, we just have never been, ever since COVID, we've not been profitable. And so we are always we're still trying to build back. And because we never have enough money to cover everything, it feels like having a budget doesn't even matter, because we'll never be able to cover everything. So I was just wondering if you could, I don't know, just respond to that
I'm
thought.
gonna ask Nate if he wants to speak to that. Did you hear the question, Nate?
I did not.
Okay, she said, if you're a business that's always losing money and never making money, is a budget necessary? But I think that's a bigger question, because a budget is always necessary. But if you're always losing money, Nate is a serial entrepreneur, so I'm gonna let him.
It's going to start with the purpose of your business. Is it a nonprofit that you're going to collect donations from, or is it a company that you actually want to earn a profit from? I think there's an obvious answer to that, right? In terms of, like, I'll give you an example. Amazon is a perfect example of a company that lost money. In fact, Jeff Bezos, when he started getting money from his family and other members of the initial investment, he told them, look, it's going to be 5 to 6 years before we even make a profit. We're going to lose for the first 5 to 6 years. Now, they actually beat that deadline. I think it was like 4 years or 4.5 years before they made a profit. However, Jeff Bezos had a budget every step of the way. His investors needed to know where the money was going, what they had planned, and how the costs were going to factor over the next 3 to 4 to 5 years. And so look at a budget less about, oh, I do or I don't have money. Look at it like it's a roadmap of vision from the financial perspective for your business. And you have 2 decisions to make. Either I have a vision or I don't have a vision for how my money is going to flow through this business. And if I don't have a vision, there's an old proverb, Proverb 29:18 says, without vision, the people perish. And I think businesses can perish too without having a clear understanding of how their money is going to be spent. Now, there's some things that are unknowns in terms of budgeting. However, you still need to put a placeholder in there and say, okay, here's my variance for that particular cost, and begin to mitigate toward it. And I think what it does is, and Shelita, you've dealt with this for many years. It creates wise financial stewardship. And I think that's important in business, to be a wise financial steward. So whether a business has a net profit or if it doesn't have a net profit, it doesn't change the mechanics of identifying where my money is best placed to eventually become a profitable business. So hopefully that speaks a little bit into it.
Yeah, thank you very much. That's helpful point of view.
And then the budget, whether it's a profit, you have a profit or a loss, the budget you always have a picture of what has happened. You know what I'm saying? So without the budget, how do you go back to know what happened, where it happened? And at some point, unfortunately, you have to decide whether it's feasible to continue the business or not. If year over year over year, when you're looking at these numbers and you're constantly losing money, then you have even harder questions to deal with.
And then also the IRS will be like, is this a hobby or is this an actual business? So again, you need to come back next week because Nate is going to do marketing on a shoestring. So he can give you some tips on how to raise that revenue.
And I have had marketing on a shoestring many, many times over. So this is a very familiar territory for back in the day for Nate Sala. So you'll definitely come back for that.
Thank you.
Hopefully that was helpful, Rachel.
Yes.
Any more questions? I would encourage anyone who's on here that does have a small business to draft at least a 30-day budget. If you haven't already done a budget, you can start small, but you should always have some kind of account. I mean, a budget holds you accountable, and it can just say, what you actually have. Is this what you planned for? Is it better than you planned? Is it less than you planned? And it helps you to say, how do I move forward? So if you don't have a budget now, I would suggest you at least sit down and write out all of your revenues and your expenses, and do a comparison for maybe the last 3 to 6 months. And that'll give you a start to, I'm sure, taking a better, clear look at your business and becoming more successful.
Each
Shelita,
one
I
is
just wanna-
being recorded, right? I'm sorry.
Say it again, April.
Each one is being recorded, right? I'm not going to be able to be online next week, and I really want to hear it and I need to hear it, but it is going to be recorded so I can be able to go back and listen to it.
Yes, ma'am.
Okay. Thank you.
You're welcome.
Shelita, I want to thank you because I got 2 calls this morning and you just reiterated everything that I told those 2 people. And I know they know who they are. And they're on this call. So I just want to thank you, especially on the one talking about smart lending. You can't stress that enough.
No. And in a time of need, I mean, you hear people say, I don't care if the interest rate is 30%, I'm gonna take it. You don't care today, but trust me, in 6 months, in 2, 3 months, you are going to care. So you have to be smart when you're deciding to borrow money. And you have to have a clear purpose on borrowing the money and a clear path and plan to pay the money back. Because even in your budget, so when you borrow money, and a lot of times in a budget, there is a line item for that, on how you are going to pay this money back. So just please, please, please be smart when you're paying money back.
And Miss Rachel, you do lending?
You said Rachel?
Or someone on here, she said that she had a few calls this morning.
Oh, that was Ann.
I'm sorry. Okay, I remember what she do now.
Yeah, my calls, they were asking questions about should I get a loan or should I do this? And we talked about interest rates and all of that. And the other one was like, I want to get some money and just do like a home equity and put it in an account to sit. But I was telling them it's just sitting. So you're creating more debt on yourself. And I mean, this was a good webinar for them to be on.
And some people are just comfortable because they have the money sitting, but again, that's not smart. It's hurting you more than it's helping you. Any more questions, comments, concerns?
Okay, doesn't look like there's any more questions, but if anyone has one, you can certainly just unmute and ask while I'm talking. I just wanted to thank you, Shelita. This was really, really good. I mean, all of the webinars up until this point have been really awesome information. And guys, if you have missed a week, please reach out to me. I'm going to put my email address in the comments and let me know what week.
I agree with you. This has been a great session. All of them has been very helpful to me. Thank you, ladies.
So
Absolutely.
welcome,
Thank
April.
you for joining.
So I've put my email address in the link. So if you need the link to prior webinars, please reach out by email and I can send it to you and mark that you have also watched that one. And just be mindful that these, if you think they were good already, they're just going to continue to impact on each one and get even the more great. So this is great information. Invite someone that you think this information would be useful to. It's okay to share the link. No, it's better for you to send their information to me and then I'll send it to Peyton and then we'll invite them that way. But anyway, guys, this is important information for your business in order to take it to the next level and to ensure the foundation of your business. And as far as loans, Justine Peterson is a business who has loans, but Shelita said it the best way. You have to make sure that first and foremost, it's the smart decision to make and to make sure you have a plan. Because if Nate said, if you don't have a plan, if you don't make a plan, then you plan to fail. And we're not here about failing. We're here to make sure that our business thrives and and not just thrive, because you can have a thriving business. What about scaling to the next level or creating another business. Stay tuned, guys. Lock in and hold on
Yolanda,
tight because we got
I
more
have,
information.
Yolanda, this is
Go ahead.
Ann. Um,
Hey,
everybody
Ann.
that's on here, if you have a friend, family member, or whatever, please refer them to the program. And I guess, Yolanda, we could send some out for with paid information. There's other
Yes.
things in this technical assistance that we have available, and we want to get everybody that's eligible for these services to make sure that they're connected. I was in the hair store today. I got braids. I know y'all can't see me, but I went to get some sheen, and I'm ear hustling. A girl was talking about her catering business. I'm about to refer her to the technical assistant. So I'm everywhere. If people have a business that I think will qualify, I'm going to refer them. So please, we have bookkeeping and accounting, legal, all type of services that are available through this Ignite Illinois. So make sure you get the information out.
Yes,
Right.
and we'll do all the work. All we need is an email and a name. That's it.
Is
But
there any referral incentives? Because I have referred a couple people over, and I have a few more people that's still interested as well.
not that I'm aware of, but the fact that they will be getting the great information that you're getting is incentive for me enough. But I can check. I don't think so though. But yeah, please refer and keep referring so we can get this information out to everyone that it is available to. Any more questions before we log off?
No, just thanking everybody for the information. It's very informative for me. Some of it I did know, most of it I did not know. I'm glad that Ann is just a phone call away that I can pick up the phone and ask those types of questions. But knowledge is power, y'all. And so more knowledgeable we become, I'm learning things that I never knew. So let's use this knowledge and gain this power to grow our businesses, y'all. Amen.
Amen.
Thank you,
Amen.
Trinice, and
Thank
thank
you,
you all for
Trinice.
joining. And again, I hope you all got something out of this and come back next week.
If
Just want to
if
say
y'all never
thank.
And
if
just
y'all
to
I just
never
let
want to
take
say
that
thank you.
too.
And just to let you all know that we get started at 12 o'clock, so you don't want to miss anything. So let's sign on early, get in there and get this information. Shelita, any last words?
Nope. Like I said, I encourage each of you to start with the 30-day and see how that works for you. And just reach out if you have questions or need help, but I promise it will be beneficial to you in the long run.
And you have my email if you need the Excel spreadsheet that Shelita was using. I don't mind, even though you can access it from Excel directly. But if you need the spreadsheet, we don't mind sharing it. So you all have a wonderful, amazing day, and I will see you back again. And we're halfway
We're
there.
halfway there.
Yes,
Yolanda, I
yes.
do want that spreadsheet, Shelita.
Yeah, I
Okay.
have you, Cynthia. I
Oh,
saw
okay,
yours. I have you
okay.
listed.
And
You
I
were in
just
the
want to
chat.
say
Me
to you
too,
all, thank
Sharita.
you so much for the information today. It was very helpful. I was able to relate to some of the stories that
Good,
they had
good.
gave. And so yes, I think I just need to work a little bit harder on some things that, I don't think I've been putting enough time into my business like I need to. And because when she mentioned, I can't think of her name, about you're not making enough money, and stuff like that. I'm kind of in that area right now. So it's like I'm making enough to pay my expenses. And that's it. I have not been able to pay myself at all. So yeah, so that's why I continue to work as well. But yes, all of this is very helpful, and I really appreciate you ladies.
Thanks, Cynthia.
Mhm.
All righty then. Any more questions, guys? All right. Thank you all for your time. I appreciate you all being here, and I look forward. Nate, did you have something to say?
I was just gonna commend Shelita. You crushed it. That was a great job there.
Yes.
Yeah, it's these are not easy topics for business owners, and it's a lot of high level, and you brought it to a level where you showed the relevance and the importance, and of course, gives people something to think about and move forward with.
Thank you, Nate.
You bet.
Yes, let's give Shelita a round of applause if y'all know how to use the reactions on your. Yes, there we go. There we go. There we go. Look at that. So anyway, we'll see you all next week, and let us all get more information to take our businesses to the next level. Goodbye till
Have a
next
good
week.
day.
Bye.